world, hunger is not a food problem. It's not a food problem because if I go downstairs and go to the McDonald's dumpster, there's plenty of food in there. So, but people in Africa need that food. Now, the problem is connecting the food, the extra food with the people in Africa and predicting who's going to need the food ahead of time.
What's up, guys? Welcome to Financial Freestyle here on Yahoo Finance, and I'm your host, Ross Mack. And look, guys, no matter where you are on your financial journey, you can never stop learning. And look, that's why I'm talking to some of the most influential people in their own respective fields, and today is no different, as I'm talking to my guy, Armando Pantoja, investor and futurist. My dog, how you doing, baby?
How's it going, man? Happy to be here, man. Always glad to chop it up with you.
Hey, nothing is better when I'm talking to my guy, especially when the crypto market is booming, man. But, right, obviously we had an episode, so let's just introduce ourselves to the audience. Who is Armando?
So my background's in technology. Later on, I got into finance. So had a company back in 2017, crypto company at the time. We got acquired, one of the biggest acquisition at the time, but this was almost 10 years ago. A lot bigger now, but I went on to invest a lot in the cryptocurrency, educate people on cryptocurrency. I'm the CTO of Quant Index, which is an investment firm. We invest in emerging technology. So what I am is I'm a futurist, an investor, and an entrepreneur. I try to predict future trends and capitalize on those trends.
You know what I love talking about you, man? It's nothing better than when the crypto market is really kind of in full swing, right? And so one thing, right, it's obviously kind of the trends, right? And you talk about spotting futurist trends. And we get, asset managers buying crypto, sponsoring different ETFs. But another thing we're seeing is stable coins, right? We're seeing legislation. I just saw, Goldman Sachs and, Bank of New York, Bonnie Mellon are in talks of digitizing, some short-term assets, like to the tune of 1.7 trillion. So one, let us know what's going on in the stable coin and what that means for the overall crypto market.
Yeah, so recently the Genius Act was passed, and that was a group of laws and legislation that's going to regulate stable coins and also adopt full adoption. So that's a positive news in the crypto market. So that signals another signal that the U.S. government is embracing cryptocurrency. The U.S. always moves first. So if the U.S. does it, all other countries have to follow. So that caused a new resurgence in attention and interest in cryptocurrency. It pushed Bitcoin up 15, 20%. Ethereum got the best returns on that boom, because most stable coins trade on Ethereum. And then XRP also did well because XRP also has a stable coin. So it just was a signal that the U.S. is moving forward in their Trump's promises during the election to fully embrace cryptocurrency and make America the #1 cryptocurrency on earth. So it's a lot of positive news, and it's positive for crypto, positive for U.S., and positive for our economy.
You know what I love about crypto, right, is one, it's decentralized. And I think you said this last time. It was like, look, regardless of who was the president and regardless if they were an advocate or against crypto was still going to do what it was going to do. However, the fact that you do have the Trump administration being huge proponents of it, it kind of just moved forward. It just pushed forward the timeline with respect to, the overall adoption of it. So like, what is this new administration, kind of what they're doing and how that is, having other institutional investors get involved in, just kind of a more global adoption?
Yeah, it was going to happen regardless. I mean, the theme of the Bitcoin conference this year was game theory. And that means that, all people will have to accept cryptocurrency. The people who lag behind will not benefit the most. People who accepted earlier will benefit the most. So it's almost a type of situation in which everybody will have to eventually. So the United States, luckily, last time we talked, we weren't sure, but this time we see the U.S. starting to make those moves because they realize that they have to be first. Then all the other countries try to catch up. So it's just a part of what was going to happen anyway. And I'm glad that everybody is finally starting to see the true power of cryptocurrency and how it can affect and help the whole worldwide economy.
It's crazy, and I love what you said is like, one, globally, everybody has to accept it. But I'm a person that's not spending my crypto. I'm owning it and holding it. But like, give me like that use case. Like I get, right, transferring money, but like the idea of spending my like hard-earned crypto.
Well, Bitcoin, because most people, that's the most familiar cryptocurrency that people know. So this is the theory behind Bitcoin. A lot of people see Bitcoin now and they say, well, the price is 120. What am I buying? Nobody is spending it. All everybody is doing is saving it like you and me. Now, that's because they're not looking far enough ahead. So the real use case for Bitcoin specifically, is that one day we will use it as a currency. Now, it won't be anytime soon. So what you're doing is you're buying something that's going to be used in the future at a depreciated price. Now, let's say the app before Bitcoin, everything gets adopted, Bitcoin gets plugged into the whole financial system. We start using Bitcoin for collateral, for payments, for everything else, for transferring value. So let's say it's 10 million a coin. So right now it's 120. So people are buying it right now, looking forward to what's coming. And then one day it will be a currency, or will be some kind of a way that people will start to transfer value. So right now we're just speculators getting in on an early trend before the technology is fully adopted.
There's no shortage of what I think Bitcoin is going to be, right? Like I see that now, you know, the Trump administration was saying, from a Fannie Mae, Freddie Mac standpoint, they will now allow you to, when it comes to underwriting you in order to get a mortgage, your crypto will now count in that, right? But I even take it a
Yeah.
step further, right, where I was able to effectively be my own bank. I had the ability, so as long as I kept it at a nice LTV, right? And what I mean by that is just the loan to value of it. But I have the ability to borrow against my Bitcoin, meaning I never have to sell it. I don't have to realize it. And the craziest part was I was only going to pay 5% APR on it. Now, I borrowed it purely just to see how easy it was for me to actually get it. I paid it back within, I don't know, 3 days, purely just so I could see, and I paid, I don't know, you know, $30 back or something like that. But like, bro, where do you see the ability? Because I looked at it like, man, I want to be able to borrow, 40, 50,000 by pledging my own Bitcoin just to go buy a house or buy an investment property and pay it right back. Like, kind of, what do you see other uses of, or better yet, because you're a futurist, like what other ways will we be able to leverage our Bitcoin?
So one of the things that like Bitcoin was the first cryptocurrency, and it's more like, we see it as digital gold. So it's like somebody taking your gold, like you have let's say you had a big chest of gold, right? So I'm gonna keep this chest of gold until you pay me back my money. Now, I'm sure that if you don't pay me the money, I got the gold. You see what I'm saying? The gold's gonna go up in value, but always it's the most it's close, it's almost close to cash. It's the closest thing to cash in liquidity that you could possibly have as collateral for a loan. So the rates are going to be lower because the risk is way lower than, let's say, a house. Let's say I'll take your house as collateral and the market crashes tomorrow. So I'm going to lose money in that. So if I have to give you a 100% loan to value ratio. So, and there's but the most interesting thing to me is that there are some cryptos out there, and they were doing this real heavy in 2020 before the crash, but they will start again. Is that some cryptos like Solana, Sol, and also Ethereum, they provide staking rewards, right? So if, let's say, for example, you loan Ethereum, so now I may not charge you an interest rate at all because I could take your thing out and stake it. And, I can, while I have it, I'm generating a yield. And then once you pay me back, I'll give you the Ethereum back. So there's ways that you can borrow money with crypto at a certain loan to value ratio, certain, the credit score, some, I think they put that into an equation, and you don't pay any interest at all, or maybe a very low interest because of the staking reward. So there's a lot of interesting things that's going to happen in the financial system. Some creative ways that they're going to come up with loans and payments and everything that we can't even predict right now. It's a pretty interesting thing, and it's a very exciting time.
So I remember, I was asking, like, bro, do you stake all your Ethereum and Solana? He was like, absolutely. And so I was like, all right, that day I went and I like started to stake all my stuff, because the average person don't even know what staking is. And I happen to be one of those. So we'll just explain what staking is, and I got a billion more questions.
Oh, in the world of crypto, blockchain is the technology that moves the money and records transactions, right? So it's just like a database. Any database at work or whatever, it's just a bunch of numbers and transfers so we can keep track of who has what and who said who what. But these blockchains have to be secured one way or another. The two biggest ways are proof of work, proof of stake. Now, proof of work means that we're going to use computers. They're going to work hard, use a lot of electricity. That's where the electricity costs come. That's where the Bitcoin mining process comes. And it's going to do all these programs, do all these things, and it's going to secure the network that way. But it's energy intensive, and it's also costly when you have to pay for the energy. But that's one way it's secured, because we know that the work was done to provide security to the network. Now, because of those energy concerns, they move to another way, which is called proof of stake. Now, what proof of stake is that instead of me using my computer to secure a network, a fast processor, I'm gonna put up some, like the saying, "Put your money up or shut up." Right? It's similar to that. So instead of using my computer, I'm gonna put 32 Ethereum into this node. And if any problems come from I do anything malicious, I do anything wrong, I don't agree, be a team player on the network, they take some of my Ethereum. So now you're way more likely not to do anything. What are you gonna transaction comes through for, let's say, $5 US value. You're not gonna steal the money or do anything malicious because you want to keep your Ethereum, right? So now you've secured network and no fees and gas to go to the network. They pay you some of those fees back in return for securing a network by more or less providing collateral to a node. So that's the way they secure a network, is to put your money up or shut up. So it's very interesting that the methods they've come up with to provide security on decentralized networks. And like proof of stake is a new one. Ethereum's that way. Solana is that way. A lot of other cryptos are that way. But it's just a beautiful thing that you can make a yield without having to have a very fast computer and all that other stuff.
I love it. Look, guys, we're going to take a quick break, but when we come back, we're talking to my guy, Armando, telling you any and everything you need to know about the overall crypto market and even more. Welcome back to Financial Freestyle. I'm your host, Ross Mack. And guys, we got my guy, Armando. And I wish I could just take calls from everybody because everybody want to know about crypto, what they should buy. So let's start here, right? What are your top 3 coins and why? If you just give one sentence on each.
Now, I give a reason for all 3. Bitcoin's the OG. So if Bitcoin falls, that's the lowest risk play. Second is Ethereum. Ethereum is severely undervalued. It took a hit in February because it was a Bybit hack. A lot of people panicked, got scared. Short sellers hit Ethereum and pushed it to well below its true value. It's still below its true value. So going forward, it's going to make probably more return in this cycle than Bitcoin. Ethereum XRP, we talked about in the last cycle, I think it was like under $1 last time I came on your show. Now it almost hit $4 last week. So the XRP always is a good choice. XRP also has an ETF on the horizon. So the XRP is going to make a lot of people probably a lot of money, especially early investors. It still has a long way to go. With adoption, Japan banks are adopting it. They say that a lot of the banks are now starting to look at it. The lawsuit is going to be 100% resolved soon. They're also talking about no taxes on U.S. cryptos. That makes XRP falls into that category as a US-based crypto. The fourth one is one called ENS, Ethereum Name Service. Now that one is because crypto right now is very difficult to use. I gotta send you a public key, send me a public key, long strings of characters. A lot of people don't understand that. But technology always starts like that. Like the internet at first, you had to type in a number, IP address to go to websites. Then over time, it builds layers. It makes it simpler and simpler to use. Crypto's no different. We're at the bottom layer, maybe layer 2. We're kind of a little bit through layer 2. But as we go forward, we're going to start building layers. So eventually, I'm going to send to, like, let's say, for example, hashtag rocks, and then that'll be where you get all of your cryptos at.
That's epic. You want to know what's crazy? Is that when I was like, I knew you were going to do 4 instead of 3. The fourth one I thought you were going to say was Solana. And so the fact you said ENS just made me say, you know what? This ain't financial advice, but I'm going to probably grab a little ENS when I get off this call. And it's been people that's been XRP, enthusiasts for, 5-7 years right before the Ripple lawsuit, etc. But, on your futurist flow, right, what would you say is the most underrated use case for blockchain that the average person is not even talking about right now?
One of the biggest problems we have in this world is logistics, and people don't realize that. I'll give you one of the biggest problems you have is world hunger. Right now, world hunger is not a food problem. It's not a food problem because if I go downstairs and go to the McDonald's dumpster, there's plenty of food in there. So the people in Africa need that food. Now, the problem is connecting the food, the extra food with the people in Africa and predicting who's going to need the food ahead of time, and also providing that food right when they need it. Now, that's all a very, very complicated problem. So it's going to provide, quantum computers will also add to that, but also blockchain can help with logistics to move that food around and track the food all over the world. And so a lot of problems like world hunger and all these other things, is we can fix it. We just don't have the computational or the database or the data, solution yet. And if we had those, we could fix a lot of problems that we have in the world. Most of the problems are not at the root level cause. It's actually just logistics.
To that point, right? Maybe over the next 3, 5 years, what do you see a intersection between blockchain, crypto, and AI?
I think all three will eventually merge. I think AI needs crypto to grow. It's another group of token of crypto that I think will do well. I didn't say it before, but called AI tokens. AI tokens are tokens that help power AI. For example, one of the biggest things AI does, the AI agents. We've heard that term recently, but AI agents, they can help. Right now, ChatGPT just launched a new way. You can need an agent to do things for you autonomously or whatever, complete projects for you, multiple step projects. But we go to a higher level, AI agents will one day run entire companies from the CEO level all the way down to the workers. So it'll be just one big. So how will that AI be able to raise funds? How will it be able to process funds? Remember, AI thinks a lot faster than us. Our banking system is too slow for the transactions. So we'll have to use crypto to be able to first tokenize itself, be able to offer shares, much like a IPO. Secondly, it'll be able to move money back and forth between its separate units within that AI model. All of that's crypto. That's what crypto fits in. Quantum computers will actually make AI smarter, a lot faster. So all those things will be merged in the next 10, 20 years to just, where our whole world will be changed.
Person that's at home, where are you telling them to, one, buy their crypto, right? And then two, are you storing it on there, or are you using like a hard wallet, aka like a ledger? Like, kind of talk us through
Well,
that to a person that doesn't own crypto yet.
so Coinbase is a good place for all beginners to start. I always say they're the most secure. Got to be careful because there's a lot of scammers out there with crypto. Don't buy crypto with somebody that messages you online. Don't invest crypto with somebody who messages you online. Nobody does that. Secondly, is about the cold wallet. There's two ways to store your crypto. Right, you can leave it on the exchange, for small amounts, I would just say do that. Like it doesn't make sense that you got $500 with crypto, 1,000. Doesn't make sense to go out and buy $100 wallet to put it on there. And maybe if you're going to accumulate, but you do lose some in the transaction fees, and but if you got 1,000, maybe even over 500, it's best to move it to what's called a cold storage device. Now that's a separate device you can buy on Amazon or at the manufacturer website. I prefer you buy it at the manufacturer website. And you can store your crypto on there. And it's something like, remember, FTX was a cryptocurrency exchange back in 2021 that failed. And when it failed, it took everybody's money and held it for a few years. Now, some other people got the money back, but it could have been a situation in which you get hacked. Sometimes exchanges have gotten hacked, and then you just lost your money. If you have it on a cold storage device, that can't happen. You control it, you have it, and only you know how to get into it. And a good one is Arculus. Another one is Trezor. There's a few more out there that people use a lot, but I like those two. But if you have large amounts, put it on cold storage. If not your keys, not your crypto. So that means that your keys have to be on a cold storage device.
All right, so question, right? Like, to the people that don't know, my understanding of a cold storage is like a little ledger that's the size of like a thumb drive, right? A little USB
Yes.
thumb drive. And so my question is, one, right? Say I put the thumb drive into my computer, I go on Coinbase, and same way you make that transaction, I put my little 25 key to send it to there. Is there a way to kind of track how much you have all the time? Like, for instance, if I was to open my Coinbase, the average person, they're going to be able to see, oh, I'm up $100, I'm up $1,000, whatever it is, and you see your overall balance. If you put your crypto on a cold wallet, how does that look when it comes to
There are
tracking it?
cold wallets you couldn't track, but now they have apps, companion apps. So you put it on the device and the app will connect to it, right? So anytime that, like for example, with Arculus, it's basically a card, right? So anytime the card is close to your phone, it will tell you the balance. So you put the card in a storage or maybe like a safe deposit box, something, you come and you check it, and whatever it is at that time, your card can be somewhere else. It will keep track of the last time you synced it. So your account or how much crypto you have will be on the app. So you can track it through an app or whatever. Now they have those.
All right, so now my next question is, if I was to lose that cold wallet, if I was to lose that Arculus card or that ledger or whatever, what happens?
They have what's called key phrases. So it'd be basically sentences of random words, and you store that somewhere, and you can always restore it from that. So basically, you have the hard physical place where you store it. You also have a backup, and you basically store those in two different places. So if one gets lost, you can always restore it to another device. So it's like a backup phrases.
Yeah, I'm always interested to, you know, figure that out. But
Like we don't like right now we're accessing IP addresses, going through network hubs and everything. We don't know that we're doing that because the apps and all that stuff takes over from us. So all we know is we press a button and I see you on Zoom. So that's what's going to be crypto in 10, 20 years will be like that. We won't know all the things that are happening behind the scenes and the more difficult stuff. We'll just know that I send you money and it works. That's what it end up being.
so right now we got Bitcoin wrapped around 116,000, right? I see price targets at 250,000, price targets at 1 million. What does it take for us to get, you know, Bitcoin to 1 million?
One of the biggest things that's going to happen is what's called right now. Bitcoin is denominated in Bitcoin, right? So, what that means is that if we go to an exchange, it says one Bitcoin equals $1 million. Not a million, but 120. The problem with that is that as the price goes up, people get more and more scared to buy it. And it's fractional. You can buy pieces of Bitcoin, but that doesn't matter because stocks are fractional. But as the price of the stock goes up, there's less liquidity and there's less people interested in it. That's why companies do stock splits to get more interest in the stock at lower prices. So basically what they do is they get a stock divided up, and now instead of one Tesla stock, you got five. Now that increases the liquidity because the units are cheaper, and also psychologically it makes people say, "Oh yeah, the price is a lot cheaper. I can conceptualize a $100 Tesla as opposed to a $500 Tesla." So same deal with crypto, right? Crypto is fractional already, but we denominated Bitcoins. We said it's 1.0 is a Bitcoin, but all you got to do is move the decimal place over, and now you can denominate a few places over. You can denominate what's called satoshis, which is the lowest unit of Bitcoin. And a satoshi is 100 million satoshis in one Bitcoin, but it's a fraction of a cent right now. So I don't believe we'll ever see a Bitcoin on an exchange because they'll denominate it in something else called satoshis. So instead of us seeing one Bitcoin equals 1 million, we'll see one satoshi equals like 10 cents, something like that. And then that's how we'll see it. And that's the next step, I believe, to increase adoption with the retail investors.
That's epic. As always, man, I love having Armando on the show because he's somebody that anytime I got a crypto question, any futurist type question, it could be quantum AI, I'm gonna hit my guy. But ladies and gentlemen, that's it for this episode. I want to thank Armando for coming on. And you guys know, make sure you like, subscribe, share this with your auntie and your cousin. And until then, I'll see you next week. But make sure you tune in each and every week. It's your boy Ross Mack. This is Financial Freestyle.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.